Thank you. Thank you for having me here, and thanks, Vinay. Before we get to the Q&A part, I thought I'll just lay the context. You're all aware that this country has today 254 gigawatt capacity, and ironically we have never on a given day or a given moment operated more than 140 gigawatt. And the balance, of course, is a story that we all keep talking about in terms of the assets which are perhaps not generating because of different reasons. And I don't want to dwell that, and perhaps we'll discuss when we go through the Q&A. But I just wanted to bring forth the point that while we also look forward and say that, look, this country perhaps needs a lot of investment, and in the years ahead we have different projections from different consultants, including perhaps IDFC would have a figure, but McKinsey talks about incrementally putting some 350 gigawatt in the next 5 to 10 years. Now, I have a different story of this, and I feel that we should all look at the capacity addition and the viability of the sector, or the interest in the sector, from the consumer perspective, because ultimately it is the consumer whose ability to pay will determine how far we can grow and how early can we grow. We are all aware that today we have 900 kilowatt hour as the per capita. Take that as 1,000 because all of you have interest in the sector. So let's take that as 1,000, and you all know that we have 125 crores, so that's 1250 million. And take 5 rupees as the tariff. So the sector becomes about $100 billion sector today. When you have this 100 billion as the kitty for the sector, in which there are different players who are performing, this market, compared to, just for those who are interested, in US with 350 million people, is a $2,000 billion economy, power sector. So compared to $2,000 billion, we are $100 billion today in India. And undoubtedly, we all talk about the fact that per capita consumption has tremendous opportunity to grow. Undoubtedly, it's much less than the world average. The world average is 2,800. We are still at 900. But I want to bring the point that the ability to pay is not basis the power sector people saying that I should move 900 to 2,800, which is the world average. It's the ability of consumer actually to consume more. So I want to bring a perspective here for several friends who are sitting in the room, that this 100 billion, for it to grow, the percentage of household income must show elasticity. Then only the consumer will be able to spend more. Today, as the last count, electricity consumes anything between 7 to 12% of the household income that's at the hands of the consumers. And similarly, we are all aware of the per capita consumption vis-a-vis the industrial GDP and the services GDP. And in these contexts, what is most paramount and what is most important is the fact that the household income must grow. And by virtue of that, because the elasticity, if you are only spending 12% or 7% on electricity, you hardly have any hope or choice that the consumer will start spending more. It won't. And since it won't, your per capita consumption will not rise. And if that doesn't rise, there is not much hope for the sector to rise. And therefore, while there will be a lot of discussion and a talk in terms of the fact that if the industrial output has to increase or the services sector has to improve, yes, all of that is important, but ultimately, what's most important is from the viability and the load factor, and from the viability, when I say difference between the peak and the off-peak, maintaining all the equipments, which means generation, transmission, distribution loaded to a point that they will actually even out in terms of the fixed cost and the annuities being paid by the consumer. It's important for this last mile consumer to actually have more household income. And that's going to be possible only once there is overall all-round growth in the disposable income to the individual. So I thought I will lay this context to say we have therefore at Tata Power started to do a tremendous amount of research in terms of understanding on all three counts: industrialization, the commercialization, which is in terms of services sector and the other consumers growing, and the perspective with regard to how this will all translate into ultimately the kitty moving from $100 billion to anywhere close to $1,000 billion. If that happens, then certainly you will have tremendous growth and the entire growth will be sustainable. Unless that happens, we certainly will have challenges. So I just wanted to lay this context, and I will look forward to interesting questions from
very interesting perspective. So I have a few more questions, and of course then we'll open it to the floor.
Exactly.
I have questions surrounding 4 areas, which is really, and this is more for Tata Power specific. One is on your generation assets, second related to coal mines and cancellation, third related to renewable assets, fourth a contradiction between what exactly you said in terms of all the negotiations and tariff renegotiations that we are asking for vis-a-vis you as a distribution entity, and how does it look for you? And last is something on consolidation and growth plans. First, I just wanted to take related to Mundra. Now, you know, we've gone through, and I was just counting when we started work on this entire compensation committee. I think it was sometime in April of 2013. We are now 18 months down, and I don't know when this saga will end. And the entire industry is saying, Tata's and Adani, let's see what happens, the rest will follow. And it doesn't seem to be ending. So where do you see this whole thing going? What is actually happening? Is it going to be a government with buyer-seller joint agreement solution, or is it going to be a court-enforced solution?
I knew this is coming, so and there are no real prizes for guessing this. I think you have to divide this, to get an answer you have to divide this into 2 perspectives. One, what competitive advantage does it bring to the consumers at large? And what does it mean for Tata Power? Because most of the time, we end up giving Tata Power's story, little realizing what does it mean from consumers' point of view. What is to be understood is that the commercial perspective of the procurers, someone has to start questioning that. I want to take example. In this whole story, some of our friends in Haryana were the naughtiest in terms of taking the matter to the court, which is fair. They have all the rights to do it. But very interesting concept is, I'm the board of one of the exchange, and very interestingly, when they go to Gurgaon to tell the customers that, you know, why you want to buy the power from exchange, because exchange can't do the trading, why don't you get a trader to do that and seek open access? We have seen bills in the societies, those people who live in Gurgaon and Haryana, where a guy is showing that, look, I am paying some 7 rupees tariff for the state, which is okay, but I am paying 19 rupees for DG set. And this incidentally has a ratio of 30-70. That means 30% I am paying 19 rupees, 70% I am paying 6 rupees or whatever. Now, if you actually look at this discernible community at large in these metro townships, Haryana consumes 400 megawatt from Mundra. And if you translate that to these type of customers which are mushrooming and the cost is being paid to the DG set suppliers, could there not be a commercial perspective from consumers to say, after all, with compensated tariff included, the cost of power is going to be 2 rupees 80 paisa at max. Why can't these customers be given an option. Will you be willing to pay this 40 paisa extra if we come to you on a differentiated basis and not apply it across the girth? But that commercial understanding someone has to build. And if you say, what about the contract sanctity and why should therefore he not see the contract? The limited point that I am looking for answer for myself is the fact that we also had contract in Indonesia. And when they reneged the contract and applied force majeure on us, and at the same time, 98% of the seaborne export countries increased their tariff. Where do I get imported coal at the original price at which we contracted? Someone has to answer us. Or someone has to give us the coal at the price at which we contracted. Now, if you tell us to do 25 years contract, these perils are naturally bound to be there. And the understanding that has to be built is, when we approached the government of India to file case against the government of Indonesia, they didn't for diplomatic reason. Now, if they did, then they have to compensate us in an adequate manner. So I have one perspective which may be selfishly vested, but someone has to also look at consumer perspective. That if he is not able to generate at 2 rupees 80 paisa, come what may, if he continues to cry on the concept of the fact that the contracts should be honored, which we are honoring, by the way, even as we talk, all 5 units are operating. As of half an hour before, we were pumping 3800 megawatt into the grid. All of that is fine, but the fact is, how long would we be able to run with this situation? And one day, if this asset comes to a grinding halt, I think the losers would be procurers, while we'll certainly lose.
You know, I don't disagree with you, but there's a lot of, see, it's not just a Tata Power issue, it's an industry issue, right, at some level. And there are different people having different tariff regimes. And at some level, I think we are all debating and discussing how we can come to one solution which is applicable across the country. Where do you see this solution emerging? Do you think from a timing perspective? Because, you know, at the end of it, it's almost like 10 lakh crore of investment, 7 lakh crore of debt gone in. There's a huge amount of investment which has gone through. Where do you see the solution going? I mean, we know that APTEL is, you know, the hearing is on 28th, the Supreme Court is stepping in on force majeure and all that. But do you see a resolution coming on this perspective? So there are two aspects really, and it is maybe a little bit of nitty-gritty, but do you see conceptually fuel as a pass-through coming into the system in India, which means enforce all contracts across the country will get changed? Is that something which will happen?
I think, Vinayak, you are asking again two questions. One, as far as the Adani and Tata Power case is concerned, that's embroiled in the legal aspect and it could well take a year plus. Because right now it's at APTEL and Supreme Court. Supreme Court will certainly return it to APTEL. After that, again, it will go to Supreme Court and so on and so forth. As far as omnibus change from the existing concept to making fuel pass-through is concerned, again, that would depend on the commercial prudence that many of the states have to exercise on central government. Center on its own, if they do that, a lot of states would feel that they had contracts and state is coming in the way of those contracts. So it is for the states to express that desire to the center to say, we want to resolve this issue, but at the same time, we are not in a position to resolve, because for all states to come together, I mean, as we all know that between two Mundras itself, there are 5 procurers, and the 5 procurers never see eye to eye in terms of having one consensus. And therefore, it is important for them to go back to central government and say, we need your support and help. And then, of course, there are possibilities there.
I'm pushing you a little bit more with in all 5 states now, with BJP in center and BJP in states. Do you see some hope around? And I'm asking because you know, a lot of these questions that I'm asking, investors have called me and asked.
Naturally.
So, you know, so...
No, I can understand every investor's concern, because this actually paves the way for more resolutions to happen. And therefore, we are equally eager that this gets resolved before we get into a problem where we are not able to run this anymore. The point that I'm wanting to express is that, yes, with all 5 governments belonging to a particular party, it becomes a little easier, party and their affiliate, because in Punjab we have their affiliate. Yes, it becomes easier in terms of at least the dialogue taking place, and that's why you saw APTEL. Sooner the government changed in Maharashtra and Haryana. APTEL has issued us a daily order, a single page order, where they have requested both sides to come sit, do a dialogue and try and come to a consensus. Because APTEL also believes that that's the best route rather than going into the longer legal route. And now to sync calendars and make sure that that meeting takes place is also becoming equally challenging. And I guess perhaps we'll have to approach APTEL to even decide a date. So that's the challenge. Until it becomes an equal cry from both sides, negotiation never takes place. And negotiation can take place on an issue that both parties want, that equally, with equal zeal and interest. So we want to give something, somebody wants to take something, then you negotiate. You don't do negotiation when one wants to negotiate and the other fellow says, why should I put my neck into that? So then it's going to be a challenge. That's what I'm saying. Somewhere this commercial interest has to also be held by the procurer in 2 hands. And somebody has to start asking them the question. I hear in our distribution, there are CAG guys talking about commercial prudence. And I don't understand why don't they ask the commercial prudence to state electricity boards. That your consumers are paying 19 rupees, why the hell are you not paying 40 paisa?
Coming to on the coal block auctions, all the coal blocks that have been deallocated, I mean, we heard that somewhere in January, February, an auction would happen. What is the way ahead in terms of this? I mean, really, from a regulation perspective, and just keeping in mind that there's so many assets which have been built already, halfway or some completed. How do you see this whole thing spanning out? You've lost 2 coal blocks yourself. Would you sort of be looking at bidding in this, or how do you look at this entire?
See, in as much as whatever has happened, instead of brooding over what happened, I would say that this is a great opportunity. It's a great opportunity for the new government to make sure that all that was embroiled and shady about the coal blocks in the past should actually be set right, and all those 214 blocks that are there with them, in addition they have the number which keeps floating, anything between 50 to 70 additional blocks that they have. So all close to about 280 blocks they should auction, and they should make sure that very firm targets are given as per mining plan, and then people monitor it as per that. We have seen that happening in Indonesia. When we went in, our own mine, take for example KPC mine, used to generate 14 million tons. Today we are generating 53 million tons. And not only that we are generating 53 from one mine, we are actually being restricted by Indonesia to 53. Otherwise, the infrastructure that we have built, we can ramp it to 80 million tons next 2 years. So I'm saying so much is possible. And if we people have done it outside, why can't we do it in India? Technology is an important part. Investment is an important part. The freedom to manage a larger footprint is an important part. Because that gives you a very important lead in terms of how would you make sure that the vehicles that come in to take the overburden and the vehicles which go out to take the coal, you can provide a very good clean circuit for them. So it becomes a lot efficient and a lot easier. The important point is, let's read this as an opportunity. And let's hope that the government will not jerk now and use this opportunity to take out all these 275 blocks and make them productive. Whatever they need in terms of bank guarantees, collaterals, I think they should ask for all. and make sure that there are firm commitment of people rather than voting of promise.
As industry, I mean, based on your conversation, do you see very active participation in this bidding? I mean, is it going to be something which people are really going to go after, or is it something which is, because there's another angle which I'm coming from, is a very aggressive bidding. At the end of it, the recovery comes again from the tariff, which is again from the end consumer. So again, Tata Power is a distributor of power. Tata Power is a generator.
Now you heard the ministry saying very clearly that for such of the projects and such of the resources which are all going to be in the power sector, and since it's going to be to the regulated concept, there will be a peak, there will be a cap which will be dictated by them. But they don't want ultimately people to quote any number and then go to the regulator and say, please make it faster. So once they do that, and then there will be a floor price, and between the two, you will have the opportunity to decide how you can bring efficiencies in your mining operations and your operations, and then bid a particular number, or you decide in terms of what hurdle rate you would want to consider for returns. So I don't think so. First of all, this government wants to, of course, we have to still wait for the document to be out. But as of now, whatever little we have heard, the indications are that they will have a controlled range in terms of pricing, and they won't let reckless pricing again go back to creating a lot of assets. The second important point that's very important for us to do is, like the way we saw standard bidding documents coming in the generation, where you lend the highway concept into power and mess up the whole issue. I only hope that somebody like that is not advising them to create the document for coal mining, because if that happens, then sooner the documents are out, you will again realize that there is no bidders. So I think it's important for them to also understand how they make the risk palatable from both sides.
So that's the third one. See, one of the big problems, I think, in the entire sector came from the original standard bidding documents, which fundamentally there were issues. And even the second round which has come, I think a lot of us had issues, developers had issues, but they have been issued. You see any possibility of reopening and getting those corrected with the new government coming in?
In fact, we have got a commitment now that all of those will be corrected, affirmatively. So one has to now wait and see when that happens and how far that happens. Because it is important for it to be, the risk part has to be clearly mapped and then decided as to how the risk is being divided between the developers and the buyers. You can't just swing from one side of the pendulum to the other side. I think that's a very important part, and I believe all those advisors which are advising from the government side must transparently put this risk in a tabular form and must indicate very clearly how is that being balanced. Today, if you see the risk in different documents, you will clearly see that it just swings. So it's in such a messy state that no one will be wanting to take that risk. And if you take that risk, then it will again happen like Mudra, that you go back to the government. And there is no point having circular references anymore in this.
So in light of all this that's happening, and you know there's enough distress in the environment right now, as Tata Power, would you be looking at acquiring assets, or would you wait for strategically for Mundra issues to get resolved before you really think about it?
I think we made our intentions more clearer than this question ought to be expressing. We announced recently after our last board meeting that we will like to conserve cash as far as India is concerned, for us to continue to operate Mundra as long as we can manage on our own, so that we meet our promise to the consumers at large. And being a Tata company, that is what our objective would be. But at the same time, we don't want to be left in the lurch, not looking at those assets which are available today in the market, and therefore we have announced creation of a platform. It's $1 billion platform where we and ICICI have decided to work together. And there are investors who are now looking at that platform and investing. What we have decided is that we will take assets which are either commissioned or about to be commissioned in 24 months' time. We are not looking at greenfield nor brownfield, other than those which have advanced to some stage. And a $1 billion platform would mean close to about 4,000 megawatt, depending on which stage, what percentage of equity we take, etc. But we have decided to be in the controlling position. And hopefully, therefore, now we will be in the game. And we have kept the provision that after 8 years of operation, after stabilizing, Tata Power would have as much interest in buying those assets as much it could be offered to anybody outside when we look at the exit option.
Just shifting from here to distribution, this whole problem surrounding regulatory assets and more so in Delhi. I mean, if you look Delhi as a whole, I think now it's 21,000 of regulatory assets. I don't know how it can ever get resolved, frankly.
Yeah, right. Again, my philosophy is very clear. I think we need to generically look at the issue and not only look at the symptoms or the ailment. The symptomaticity is important for us to review the regulatory construct in this country. It is important now for us to lift the state regulators to regions. We should abolish state regulators. We should move to regional regulators. We can have this regional regulator configured with one member from each state, one nominee from each state or member from each state. But this regional regulators should operate like the RLDCs operate, the regional load dispatch centers operate. And therefore they will not be in the clutches of the government and they will not be influenced by the politics of the day. Take Delhi. He announced PPAC and within 2-3 days when those two political parties put pressure, he withdrew it. And now he is blaming CRC, saying that you have not given a transparent order for NTPC. And CRC has issued a statement to say, I have been issuing this order since Adams. And it is only those two political parties which have to tell you as to whether my order is transparent or not, which is clearly, one can read clearly that this is what the problem is with the regulators. So it's not an issue of regulatory asset. Regulatory asset clearly was because somebody wanted to play to the gallery. And very funnily, it was not politician then at that time. Because the politician of that time, the chief minister, wanted the tariff to increase. Because she said very clearly at that time that the tariff should be in line with what the costs are. But at that time, the regulator himself wanted to play to the gallery because he wanted to join Aam Aadmi Party, and which he finally joined. So I think if people have these vested interests and they have political interest, you can never call them as independent regulators. It is therefore important that instead of talking about regulatory asset and other ailments, we should talk about setting right the regulatory phenomena itself. And it's very sad that despite mentioning this in the recent amendment that they are trying to take to the cabinet, they haven't looked at this aspect except to make a regulator more accountable. And that looks funny because if you look at the construct of that language, they are saying the state regulators will be reviewed by CRC, CRC will be reviewed by APTEL, and APTEL will be reviewed by Supreme Court. I don't know what it means in terms of the fact that they will write their confidential reports, or will they have the powers to remove them, or will they judge them with what criteria? Because it's not like your and my industry where we talk about KRAs and KPIs. So one doesn't understand exactly what do they mean by making them accountable. The accountability has to be more by virtue of first making them clearly independent and then holding them accountable in terms of laying down clear KPIs.
You know, so we've seen generation delicensing, so much of capacity has come up. You've done distribution, you have 2.1 million customers now. Do you see any sense of some distribution opening up under the current regime, at least franchisee if not privatization?
Quite likely, for the reason that the present minister has been talking about distribution reform. And one of the points that he keeps saying that he agrees that government should not be in the business of business. However, since this is a state subject, you actually need strong mandated governments. If you don't have clear mandates, then the governments of the day will always like to play popular politics. And it's not difficult, but at the same time it's not easy either. We have shown it in Delhi that in 10 years we could bring down the losses from whatever 53% that they were, anywhere close to 10%. Now if you could do that, we can do that in other cities too. And therefore it is important for the politician of the day to see whether can this become one of the points by virtue of which I will win the next election. And I must say that the lady there in Delhi won 3 elections, and she did this in the first period and at least won the next 2 elections, and one of the prime factors was election.
One small piece of your entire business is renewable. Now, purely as Tata Power, do you really see this as a, in all the so many businesses that you handle, as a standalone growth business, or is it like an RPO obligation? And do you see again the scalability of this business going ahead? You know, is it some business which you think you could list going ahead? Some thoughts on that?
I would say the commitment is very steadfast and announced. We have announced clearly that we will do 20 to 25% of our capacity base based on green assets. RPO obligation exists and therefore we have to dovetail it to renewables. But in South Africa, RPO obligation doesn't exist. Zambia, the RPO obligation doesn't exist. And today, we are putting the largest wind farm in Africa, in Cape Town, which should get commissioned next year. And similarly, we are putting different other projects across different locations. So we will continue to have a large portfolio of green assets. And we will do that as a matter of our mandate, that 20 to 25% of our capacity base will always be from the green assets.
Last thing really is on your international foray. Now you've gone to Georgia, you're doing something in Vietnam, South Africa, and you already had mining in Indonesia, which you exited. How different has been your experience dealing in these countries when you look at your experience in India? I mean, and is there a reason of not wanting, or is it this that the opportunities are more and therefore you're going there, or, you know, as some people say, I've had enough over here?
I don't want to say more than what is the way that we have started to look at international business. About 3.5 years back, we did a scenario planning exercise and clearly realized that India perhaps is not going to grow faster. And one of the part of input I just expressed, because we have not been able to get answer. By the way, it's remained flat for the last 4 years. So therefore, we have started to look at those aspects. And we said, if it's not going to grow beyond 100 billion in a faster time, then there is no point continuing to fight between the ecosystem. And that's where when we decided to move out. And when we moved out, we had a choice between going to places which were less risky, but at the same time returns were much lower. So we decided that we will go to places where we can manage risk, mitigate risk, and at the same time returns will be to our thresholds and liking. And that's why we chose Africa as one. We've now made 4 clear parallel geographies, 4 clear parallel areas to approach. One is Africa. The second is Middle East and Turkey. Third is India and SAARC. And the fourth is Southeast Asia, which are select countries in terms of Vietnam, Indonesia, Myanmar. And we have put teams in 4. And we have said, whosoever brings the investment and gets all the clearances will become the benefactor of whatever cash I have to invest. And you'll be surprised that it's coming thick and fast from other geographies than India. And the irony is, in the last 3.5 years, we have committed, other than our T&D investment in India, We have invested on generation side, everything outside. Now, I want to give another interesting part to the investors here. In about 3.5 years back, precisely December of 2011, we won 2 bids. One bid in Himachal Pradesh in a project called Duggar Hydro. That's a 400 megawatt project. And the other project that we won was the Georgia Hydro, which was a bid which was more on a sort of IFC come CI ran that bid. IFC ran that bid. Interesting part is that when we talk today, both projects having won on the same month, 30% construction is done in Georgia Hydro. And I'll be happy if I can start Duggar by 2017. I will commission hydro project in Georgia in 2017. If I can start, it will be a great effort on our side. Now the answers are very clear. And I said this to the Chief Minister of Himachal Pradesh, that there is no point scratching each other's back to say we are good and great. See what's happening worldwide. And you have to benchmark in terms of ease of doing business, not related to what Uttarakhand does or what Arunachal Pradesh does, but what Georgia does. Because the investors will have the same money. And the currency is all fungible, and we will naturally have those opportunities harnessed. You will be surprised, the Prime Minister of that country reviews projects. It's quite like what Malaysian Prime Minister used to do, or quite like what Chandrababu Naidu used to do in his previous innings. And it's a fun. I have worked with Chandrababu Naidu to execute one of the projects earlier, and I recently when I met him and I saw the same enthusiasm in him. Now those are the type of people that we need in terms of how systemically we will make things happen. And otherwise we'll keep scratching our back and we will see the results.
We can have the questions from the floor. Anyone has very specific questions?
I don't think so. You left any issue to be asked. And it's already one, so you should actually stand between their lunch and any more questions.
Any questions?
When do you envisage investment activity to pick up in the power sector in the next couple of years?
Can you be a little loud?
When do you envisage investment activity to pick up for the sector as a whole?
See, let me add very quickly to tell you that investment activities and opportunities exist even today. It's only that the serious players were enjoined by not so serious players. And we had many non-core players who entered the sector. And that brought a very different flair or a very different set of activities in the sector. My sense is this entire movement of those non-core people exiting and serious players therefore consolidating perhaps could take another 5 years. And then you will start to see the activities in the real earnest. The only exception to this could be if the distribution starts to reform. Because if the distribution starts to reform, what I talked about in terms of the size of the sector, there is one element that will get unlocked. Today the 5 rupee tariff that consumer pays includes 35% AT&C losses. If that AT&C losses can be brought down quickly to less than 15%, then the disposable money that the consumer has will therefore become available for him to consume more. And that will put pressure, therefore, for the sector to lift up. I think that's a very important one. And that's a large number. If sometimes I can share with you separately. What was the question there? Yeah.
Hi. Over the next 3 years, what proportion of your total power capacity would Mundra be at that point? Let's say 3 years from now, depending on how you're investing into other capacities. And the second question is just on your sort of non-core investments. If you can just throw some light in terms of any value extraction from there.
See, today Mundra is about 50%. And 3 years from now, Mundra will be less than 30%. It's only bound to grow because, as I mentioned, the focus in the last 3 years has now turned to getting things from international. And I'm only happy to report that in most of them, we have US dollar tariff hedged fully. In 2 of them, we have done mega guarantees to back us up. And the threshold is upwards of the numbers that we get in India. So that's a very positive sign. So it's not in Indian rupee, it's in US dollar, and yet completely hedged, it is more than what returns you expect in India.
Just on the second question of the non-core assets, if you can just answer that as well, non-core investments.
The non-core investments depend on when can we actually fetch the right price. So we will continue to look at those opportunities, and when we believe that this is the right price to exit, we will certainly exit. I can only tell you that the entire board and management is completely in sync in terms of the fact that we need to impact.
Yeah, good afternoon, sir. So could you elaborate a little bit on the coal auction side that you talked about, the challenges that you think you would face from a policy perspective, and in terms of the payment mechanisms, the other model.
You're talking about the Indian context?
Yeah. And if you were to suggest an auction mechanism which would be the right one, what would be that kind of a model that you would be happy with as a player? The second question would be on the logistics part of the coal side. So, what's your sense on what's the progress we are making there in the last 6-8 months? And third, when commercial mining is allowed, would Tata Power be a player with interest there in Indian coal?
Okay. So let me talk about the first one. We, in fact, we had made those suggestions based on our Indonesian experience. When the government was fumbling with this aspect that our current account deficit is increasing, there is so much coal that we are now required to import. Therefore, what could be a very quick fix? And at that time we had suggested that you should actually invite the largest mine development operators, the likes of Thies, the likes of Laytons, the likes of many others who, the Pama, the Dharma Hanwa, those who are very large. In Indonesia, we have seen these people do mining of the order of 200 million tons of coal, one guy. So they have equipments, they have wherewithals, they have the ability. And what you should do is to say 100 blocks with capability to mine 10 million tons each in the next 3 years. You should call them and tell them, look, we are handing over this block on a lease basis. We will be the owner. Government will continue to be the owner. We don't want to get into those issues of how much is the coal inside, how much is... But you come in and give us the quote in terms of what is your leasing price for all the serial equipments that are there. And in addition, what do you need from mining depending on the fact that if the table size is so much. So provide all those. We gave them examples of how we operate mining in where we don't know based on just the borehole information as to what surprises we will have, and therefore those are provided for. And when you do that, you would find that in 3 years from now you can easily add 100 to 150 million tons easily. Neither you should lose the ownership of the coal, nor you will lose the ownership of the mine, but at the same time you will get 110 million, 150 million contributed. If you want to ramp it up, you ramp it up for the existing mines. And therefore, instead of giving to developers who, again, you will have the non-core people who would come in, perhaps like the way it came in power sector, who would again look at the fact that can they make a quick buck and stuff like that. So in order to get all of that, you cut the chase and get the right type of people who are qualified to do this job the best. Give them those minds and give them a clear schedule and say. Other interesting part that we saw exist in some of the difficult mines in Indonesia. This is a great learning, and we provided that to Government of India to say, you can integrate that. They say that, look, once you commit based on a mining plan, a particular quantity, if that annual quantity you are not able to achieve 85% of that for reasons that it rained more or for the reason that you had breakdown of equipment or whatever, you will make good that by importing the coal at your cost. Now this is a beautiful clause, and I said you should actually incorporate this to make sure that India therefore gets a predictable output at a predictable price. I think in this country, from the regulatory success and from the success for consumers as well as industry, for an economic activity to spurt up, the biggest issue that I didn't talk today, the biggest theory that I have is we should have predictable tariff. You should be able to announce what way the tariffs will move from today to next 10 years. If you are not able to do that, nobody will come to your country to do an economic activity. You go to the other countries today, they are willing to give you a contract and say, this is what I will charge in year 1, this is what I will charge in year 10. And a complete profile is given, only a limited part is linked to maybe the coal price or the oil price or the gas price. But then that's the way that people are attracting investors today. You cannot be saying, I will see what will happen at that time. That's not the way the business is run. So it is important for us to become very predictable in terms of activities that we do and the tariffs that we determine.
Any other question for you? Thanks, Anil. It's been a pleasure having you.
Thank you.